What a crazy week it's been in the market. Everything is red. The S&P 500 is down, penny stocks are down, but AI and quantum computing stocks got absolutely smashed. Now in today's video, I'm going to talk about one of my favorite stocks of 2024, but it got absolutely smashed down this week. But I believe that this has provided a fantastic opportunity, and in this video I will explain why. Today I will explain why I feel that Gorilla Technologies is still a great AI play for 2025. But before we get into the video, if you find any value in this, can I ask you to smash the like button? It literally costs nothing, but it helps the channel out so much. I'm aiming to get 1,000 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. Gorilla Technology is a global solution provider in security intelligence, network intelligence, business intelligence, and IoT technology, providing a wide range of solutions including smart cities, network video security convergence, and Internet of Things, across select verticals of government and public services, manufacturing, telecom, retail, transportation, and logistics, by using AI and deep learning technologies. Gorilla Technology Group is headquartered in London in the UK, and its expertise lies in revolutionizing security and enhancing resilience, delivering products that harness the power of AI in intelligent video surveillance, facial recognition, license plate recognition, edge computing, post-event analysis, and advanced cybersecurity technologies. By integrating these AI-driven technologies, Gorilla empowers smart cities to enhance efficiency, safety, and cybersecurity measures, ultimately improving the quality of life of residents. Looking at the investor's presentation, we can see that the company has been around for over 20 years, so this is not some tech startup with no actual experience, and they also have 29 patents for their technology. But things are only starting to take off for Gorilla Technologies in the past year. They went public in 2022 at a valuation of over $700 million, but the company is now deeply discounted with an insanely low PE ratio. They have award-winning technology, and last year they got their largest order in the company's history, over $270 million from a single order, and have partnerships with major companies such as BT, Dell, and Ericsson. Now we can see that this is a truly global company with offices all over the world on every continent. And guys, anyone who is interested in this stock, I highly recommend to check out their website and look up their investor's presentation. As we can see here, as I flick through the pages, there is a lot of details that I am skipping past in order to keep this short. But it's always important to look at the leadership teams that are running these companies, and Gorilla Technologies has a top-class team, with people coming in from major technology companies such as IBM, Cisco, and Microsoft. But the company is currently embarking on a massive scale of growth, both geographically and technologically. And when we look here, we can see that they have a long history of revenue growth that has really accelerated over the past 2 years, where they have turned the corner from loss-making into profit-making. So Gorilla Technology stock took a pounding over the past week. When I called this stock out back in November at only $5, it was just starting its massive run up to its 52-week high of over $25, which is a crazy 400% increase in just a few weeks. But then over the past week, the stock has pulled back about 50%. So what exactly is going on? And should we expect Gorilla Technologies to rise again? So first of all, what caused the stock to drop like this in the first place? Gorilla had teased us that they had some big news coming, but then on Monday morning they dropped this. Gorilla Technologies Group announced its updated share count, proceeds from recent warrant exercises, and an update to its market capitalization. As of January 3rd, 2025, Gorilla has 18.4 million ordinary shares outstanding. This reflects the full conversion of preference shares, as well as the exercise of a combined total of 2.6 million Series A, B, and Series C warrants. The company has received over $15.7 million in fresh cash from the holders of these warrants in connection with this exercise. So basically, the outstanding share count had been about 11.6 million before this, but now there's an extra 7 million shares after this exercise of warrants and conversion of preference shares. And as Gorilla have said, they have received a cash boost of about $15.7 million after this conversion. But we are talking about a stock here that was flying high at $25 and continually rising. But in effect, it's like as if there has been massive dilution at only $2 per share, because they have got $15 million from a 7 million share dilution. So very understandably, the market has reacted badly to this. But if we look at the chart here for just a moment, we can see the effect of this. Right now, the stock price is $12.40. And the market cap is about $240 million. Which means that the price to earnings ratio is about 4.5. Now, this PE ratio is one of the things that caught my attention about Gorilla in the very first place, and once again, this is very low when compared to some of our favorite stocks. For example, SoFi's PE ratio is over 80, while Palantir, whose PE ratio has been criticized constantly over the past year, has a PE ratio of over 340. Even mega stocks like Nvidia with a PE ratio of over 50, or Amazon has a PE ratio of over 45. So Gorilla's drop in share price of about 45% is kind of fair considering the sudden increase in share count, but the stock is still very far from being overvalued. Now, there are some other concerns here, which I will talk about in a moment, so stick around for that. Because it's not as simple as just looking at the PE ratio and thinking, this is so low, it must be a great undervalued stock. There are other things to consider. And there are some issues that some people consider to be red flags when it comes to Gorilla Technologies. But the very next day after that terrible announcement, Gorilla released some very big news, some very good news. On January 8th, Gorilla Technologies Group announced a groundbreaking collaboration with AECOM and NC Smart Cities. This marks the beginning of the Santa Marta transformation into an AI-powered smart city, setting the stage for broader opportunities across Colombia and the Latin America region. This Memorandum of Understanding, coordinated in collaboration with the CAF, Development of Bank of Latin America and its executive director, was signed in a high-profile ceremony attended by Santa Marta's mayor, representatives of the British government and industry leaders. Jay Shandon, CEO of Gorilla Technology, stated, "The transformation of Santa Marta marks the first phase of a 4-phase initiative that will revolutionize smart cities across Latin America. This 20-year contract allows us to build an end-to-end smart city, integrating AI into security, mobility, environmental monitoring, and more. It's a scalable model for other cities in the region." And this could be just the first of many deals of this type, as he went on to say that we are actively engaging with over 20 cities between the United States and Latin America. And AECOM Senior Vice President said that they envisioned this collaboration as the first step in a long-term strategy to introduce AI-powered smart solutions to cities across Latin America. Now, Gorilla might be a small company. Even at a $250 million market cap, this is still a very small listed company. But AECOM is a Fortune 500 company. They have over 51,000 employees and do revenue of over $16 billion annually. So even people that are skeptical about Gorilla Technologies have to admit that this looks like it's going to be a major deal for the company, working in collaboration with one of the world's leading companies. But what do analysts think of Gorilla Technologies? And this is where it gets interesting. Gorilla stock currently has a price target of just $13, which the stock price has now fallen below. But if we go back to last year, this stock had buy ratings and analyst price targets of $48. So there is clear potential for the stock now, even if it has been beat down by 50% in the past week. Another contract that could see this stock skyrocket again is the fact that Gorilla Technologies has several potential contracts on the horizon, such as this one. Gorilla has been shortlisted for a groundbreaking smart education and digital infrastructure project with an anticipated value of $400 million for an initial 5-year phase. This initiative, based in a major investment-grade city in Southeast Asia, marks the beginning of a multi-phase program with additional projects that could exceed $2.5 billion in spending over a 15-year period. This is an AI company with a market cap of only $215 million and a PE ratio of only 4. Now, as I said earlier, there are some red flags that have investors concerned when it comes to Gorilla's impressive growth and their revenue. And this is a very good article on Seeking Alpha that I'm going to take a quick look at. The revenue and profitability outlook is robust as the company is well poised with a large backlog and strong pursuit of multi-million-dollar deals. However, the cash flow conversion profile is heavily impaired due to high receivables. PE valuations are at a discount, but this is offset by a bit of the distortions caused by the large delays in cash flow conversion versus revenue recognition. First of all, this is a very good point on the revenue growth. 2024 is expected to deliver $71.2 million, according to Wall Street consensus estimates, leading to a solid 33.4% year-over-year growth. In addition to this, there is further upside as Gorilla is actively bidding on large projects with telecommunications company Broadsat. However, when we move on to the balance sheet, this is where Gorilla's revenues have drawn some skepticisms. The company's net working capital days on revenue stands at 150 days, driven by extended receivable days also at 150 days. But as it says here, one of the possible reasons for this may be due to their contract with the government of Egypt, since government business in emerging markets tends to have very elongated receivables. Again, as it said in the company's filings from 2023, historically a single customer has accounted for a material portion of Gorilla's revenues, and the government of Egypt is anticipated to account for a material portion of future revenues. A material portion of Gorilla's revenues over the next 3 years is expected to come from the Egypt contract. Now, if Gorilla continues to be able to win contracts, like the one that we've seen this week, then the revenue from the government of Egypt becomes a lesser portion of overall revenue. Again, these new contracts are in another emerging market such as South America or Asia, so maybe we could see similar issues arise. The fact that Gorilla has partnered with AECOM does give me confidence though. But guys, what do you think? Let me know your thoughts on Gorilla Technologies in the comments below. Did you get into this stock when I first called it on the channel at only $5, or did you buy at the worst time just before the conversion of warrants? Leave a comment and let me know your price targets. Remember that I'm not a financial advisor and this is not financial advice, so I highly recommend you do more due diligence. But if you've enjoyed this analysis, then please like and subscribe, and make sure to vote for what you want to see next. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the next video.